Let's break down how you can deduct a home office on your income tax return. If you are self-employed or run a small business from home, you may be eligible to deduct certain expenses related to your home office. This deduction can help you reduce your taxable income and lower your tax bill. To qualify for the home office deduction, you must use part of your home exclusively and regularly for business purposes. This means that the space must be used solely for your business and not for any personal activities. I'm going to read out some activities the IRS considers eligible for a home office from IRS Publication 587. So I have pulled up the rules the IRS sets out for using the home office deduction. So it looks like, generally speaking, you need to use whatever space you have in your home. You have to use it exclusively and regularly as your principal place of business. It needs to be somewhere where you either meet with patients, clients, or customers in the normal course of your trade or business. It can be a separate structure that is not attached to your home, like an external garage or a utility shed. It can also be used for storage. Say that you're like an e-commerce seller and you need to keep your inventory somewhere. You can use it for that. You can also use it for rental use or as a daycare facility. Now, there are some exceptions to the exclusive use rule. So if you use a part of your home for the storage of inventory, or if you use a part of your home as a daycare facility, it does not need to pass the exclusive use test. You can use it for personal use and still take the home office deduction. There are two methods on how you can calculate the home office deduction. There's the simplified method and the regular method. The simplified method allows you to deduct $5 per square foot of your home used for business, up to a maximum of 300 square feet. So that basically means your maximum deduction is $1,500 under the simplified method. The method is easy to use and doesn't require detailed expense tracking, so it is the preferred method for many small business owners. Keep in mind, you cannot use the simplified method for any portion of your home that is rented out. So if you have a bedroom you're renting out on Airbnb, you cannot use the simplified method. Next, let's discuss the regular method. The regular method involves calculating the percentage of your home used for business and deducts a proportionate share of your home expenses, such as interest, insurance, utilities, repairs, and depreciation. This method can potentially offer a larger deduction, but it requires more record keeping. Suppose your home office is 200 square feet and your home is 2,000 square feet. Your home office takes up 10% of your home's total square footage. If your total home expenses for the year, like utilities, property taxes, repairs, etc., are $20,000, you can deduct $2,000, calculated by taking 10% of $20,000. In this case, the regular method would offer a greater tax benefit than if you had to use the simplified method, which would max out at $1,500. An additional benefit of the regular method is that homeowners can claim a yearly depreciation expense deduction for the portion of the home used for business. So, similar to the regular method, you would multiply the depreciable basis of your home by the percentage of square footage that your office takes up. That resulting number is then depreciated over 39 years, not the 27.5 years that you do for residential real property, since the IRS sees your home office as non-residential commercial property. So instead of depreciating over 27.5 years as you would for like residential rental property, you would depreciate it over 39 years. So let's say, for example, the basis of your home is $200,000 and your home office takes up 10% of your house. If your depreciable basis is $200,000 for the entire home, you would take 10% of that, which is $20,000. You would then divide the $20,000 by 39 years, and that would get you roughly how much you can deduct. The IRS does have a table on what exact percentage you would deduct in the first year based on when the home office was placed in service. The IRS requires that you maintain accurate records to substantiate your home office deduction. This includes keeping receipts, canceled checks, and other documentation that supports your claim. The home office expense deduction can provide significant tax savings if you qualify. By understanding the simplified and regular methods, you can choose the option that best fits your needs and maximize your deduction. I hope this helps you navigate the home office expense deduction. If you have any questions on this topic or need further clarification, feel free to make a comment. Otherwise, thanks for watching, and I'll see you in the next one.